Welcome to the deep dive. Today we're plunging into the world of Johnson & Johnson. You probably know the name, but maybe think beyond the Band-Aids.
Mhm.
This is a real healthcare giant.
Absolutely. We're talking pharmaceuticals, like cutting-edge medicines, and also medical technologies that are, changing how doctors treat patients globally. A massive footprint.
So our mission today is to really get under the hood. We're digging into their 2024 performance, using their annual report mainly.
Yeah, we want to unpack how their different business segments are doing, what's driving their financials, and importantly, how they plan to create value for shareholders. Let's dive in.
Okay, sounds good. So to get a handle on J&J, we need to understand its structure. It's basically two main parts, right? Innovative medicine and medtech.
That's right. Let's start with innovative medicine. Think of this as their prescription drug powerhouse.
Okay.
They're tackling some really tough diseases across, well, a lot of areas. Immunology, there's things like Crohn's, rheumatoid arthritis, infectious diseases like HIV treatments, neuroscience, so therapies for depression, schizophrenia, oncology, obviously fighting cancer. Then there's cardiovascular and metabolism, think blood clots, diabetes, and also pulmonary hypertension.
Got it. And they have some big name drugs in there.
Oh, yeah. Names you might recognize like Remicade, Simponi, Stelara, Tremfya, Spravato, and a key cancer therapy called CAR-VY-KTI.
Stelara, I feel like I've heard that one mentioned as being, well, pretty important for their sales.
You heard right. It's huge. In 2024, Stelara brought in about 11.7% of J&J's total revenue. That's massive for one drug.
Wow.
But here's the kicker. They're expecting biosimilar competition for Stelara to hit the market in 2025, both in Europe and the U.S.
Ah, so like generic versions, basically.
Essentially, yes. Lower cost competitors.
Mhm.
And that's, a really significant challenge they're bracing for. It's not a minor thing.
Okay, a big hurdle on the horizon. Let's switch over to the other arm then. MedTech. What's that all about?
MedTech is all about the tools, the devices, the technology used in healthcare settings. It's incredibly broad.
Like what specifically?
Well, think cardiovascular products. And this area got a major boost recently with their acquisitions, Abiomed in 2023, and then Shockwave Medical just in 2024.
Okay.
Then there's electrophysiology that deals with heart rhythm issues. They also have a big surgery division covering, advanced tools, general surgical equipment, and vision that includes contact lenses, but also surgical equipment for eye procedures.
So really diverse.
Very diverse. It's all aimed at making medical procedures better and improving outcomes for patients.
So with these two kind of different but vital segments, how does J&J actually plan for growth? What's their strategy?
Well, their growth plan really rests on a couple of key pillars.
Yeah.
First and foremost is innovation. Constant, sustained innovation.
Right.
They have this enormous pipeline of new drugs and devices under development, and they back it up with money, a huge amount spent on research and development. We're talking $17.2 billion in 2024 alone.
$17.2 billion, that's incredible.
It is, and it pays off, About a quarter, 25% of their total sales in 2024 came from products launched just in the last 5 years.
That really shows the R&D engine working then.
Exactly. It shows they're not just relying on old successes. They need that constant flow of new stuff.
You mentioned acquisitions bolstering medtech. Are acquisitions a big part of the overall growth strategy too?
Oh, definitely. It's a very deliberate part of how they operate. In 2024, besides Shockwave, they also bought Ambrx Biopharma and Proteologics.
Okay.
And each one targets a specific area they want to grow in. Ambrx is for oncology. Shockwave, as we said, really beefs up their cardiovascular tech with something pretty innovative.
Yeah.
And Proteologics is in immune-related diseases.
The Shockwave deal sounded quite large.
It was substantial, yeah. Around $6.7 billion, and they funded it with debt. That tells you they see a really strong future for Shockwave's technology in treating heart disease. It's a big bet.
So innovation through R&D, growth through acquisition. What else are they focusing on?
They talk a lot about their people, what they call human capital, focusing on getting the best talent, developing them, creating a culture of, innovation and inclusion. They mentioned their credo guides this.
Their company philosophy.
Right. And they point to high employee engagement, like 94% participation in a survey, a pretty low voluntary turnover, around 6.3%, suggesting their workforce is stable and hopefully motivated.
That makes sense.
And finally, like almost everyone these days, they're really leaning into data science, machine learning, AI, trying to use that across the board from discovering new drugs to making their supply chains more efficient.
But they must know there are risks there, too, with AI and
Oh,
regulations.
for sure. They acknowledge that.
Yeah?
It's got huge potential, but also emerging risks, and, the rules around it are still evolving.
Okay, so that's the growth plan, but operating at this scale in healthcare, I mean, the challenges must be intense.
Absolutely intense. Competition is fierce in both innovative medicine and medtech. Well, they're constantly battling on multiple fronts. Cost effectiveness, can they prove their product is worth the price? Innovation, someone else is always trying to create the next big thing, protecting their patents, proving their products perform better. Then there's pricing pressure from payers and navigating reimbursement systems.
And the risk that someone just comes out with something better or cheaper.
Always.
Yeah.
That's a constant threat. And like we talked about with Stelara, when a blockbuster drug loses its patent protection, that revenue hit can be really significant. That's a built-in challenge in the pharma world.
And what about the regulatory side? Healthcare is famously complex there.
Oh, incredibly complex. And it feels like it's only getting stricter. Governments everywhere have tight regulations on drug development, clinical trials, device manufacturing, marketing, everything.
Right.
You need mountains of data, extensive testing just to get approval. And there's always the risk regulators could force a product withdrawal, a recall, or impose big fines. It's a high-stakes environment.
And pricing pressures aren't just from competitors, right? Governments play a role too.
Definitely. Healthcare reforms, government initiatives, they put a lot of pressure on pricing. Things like the Inflation Reduction Act in the U.S. or the 340B drug discount program. These directly impact how much they can charge and their overall profitability, especially for the innovative medicine side. But medtech feels it too.
We've seen how global events can shake things up recently. How vulnerable is a company like J&J to things like pandemics or economic instability?
They're certainly not immune. Global health crises like a pandemic can massively disrupt their supply chains, which are incredibly complex and global. It can affect manufacturing, change what customers need or demand.
Yeah.
It's unpredictable.
Yeah.
Then you have economic factors. Inflation drives up their costs. Currency devaluation, some countries they mentioned, Argentina, Turkey, Venezuela, Egypt, it can really hurt the value of their international sales when they convert it back to dollars.
So they have to manage costs really carefully.
Exactly. And make smart pricing moves. Yeah. Plus, running those complex global manufacturing operations, all needing regulatory approval, adds another layer of risk. And let's not forget cybersecurity.
Always a threat for big companies.
Increasingly sophisticated threats. They have to keep investing heavily just to stay protected. And finally, there are the ongoing legal battles. The talc litigation is probably the most well-known, and that's a significant, long-running challenge with potentially big financial and reputational costs.
Wow. Okay. That really lays out the landscape, the opportunities, and the significant hurdles. Let's pivot to the financials then. How did they actually perform in 2024? What did the numbers show?
All right, looking at the top line, worldwide sales hit $88.8 billion in 2024. That's up 4.3% from the previous year.
Solid growth.
Pretty solid. And what's interesting is how they got there. Most of that growth, about 5.9%, came from selling more stuff, volume growth. Price changes were basically flat, 0.0%. But they did face a headwind from currency exchange rates, which knocked off about 1.6%.
Okay, so volume was the main driver.
Primarily, yes. And if you actually take out the COVID-19 vaccine sales, which naturally dropped off quite a bit,
Right.
their underlying sales growth worldwide was even stronger at 5.5%.
And how did that break down geographically, U.S. versus international?
The U.S. market was particularly strong for them. Sales there jumped 8.3% to $50.3 billion. International sales, though, were down slightly by 0.5%, reaching $38.5 billion. But again, that dip was largely because of the lower COVID vaccine sales outside the U.S.
Got it. And looking at the two big segments, innovative medicine and medtech, how did they contribute?
Innovative medicine brought in $57.0 billion in sales. That was up 4.0% for the year.
Yeah.
Key driver there was the strong performance of CARVYKTI, their cancer therapy.
Okay.
And medtech. That segment grew 4.8%, hitting $31.9 billion in sales. Significant boosts came from their electrophysiology business and the contribution from the newly acquired Shockwave Medical.
Makes sense. Now, what about the bottom line, profitability in 2024?
So their reported net earnings were $14.066 billion for 2024. But you really have to put that number in perspective.
Why is that?
Because in 2023, their net earnings looked much higher due to a huge one-time gain they recorded from spinning off their consumer health business, Kenvue.
Ah, okay. So not really an apples-to-apples comparison year over year on that final number.
Exactly. If you look a bit higher up the income statement, at income before tax, you see various things impacting both segments. They had costs from getting out of COVID vaccine manufacturing, some restructuring charges to streamline things, ongoing litigation expenses, and some write-downs on assets.
Right, those challenges we talked about showing up in the costs.
Precisely.
We touched on the massive R&D investment earlier. Just remind us of that number again.
Yep, $17.2 billion invested in research and development in 2024. It really highlights their core strategy, betting on innovation for the future. It's fundamental to who they are.
And cash flow. How much actual cash did the business generate? That's always key.
Very healthy performance there. They generated $19.842 billion in free cash flow in 2024.
Wow. How's that calculated again?
You take their net cash from operations, which was $24.266 billion, and then you subtract what they spent on capital expenditures like property, plants, equipment, which is $4.424 billion.
And having nearly $20 billion in free cash flow gives them a lot of flexibility.
Absolutely. It's fuel for acquisitions, paying dividends, buying back stock, investing back into the business. It's a sign of strong operational health.
Let's touch quickly on the balance sheet then. What did their financial position look like at the end of 2024?
Pretty strong. They had $24.5 billion in cash, cash equivalents, and marketable securities on hand. Good liquidity.
And debt. You mentioned the Shockwave acquisition was funded by debt.
Right. So total debt stood at $36.6 billion at year-end. That was up from the prior year, mainly because of financing that Shockwave deal. So if you net the cash against the debt, they had a net debt position of $12.1 billion.
Okay. And total equity?
Total equity was $71.498 billion at the end of 2024. That's basically the company's net worth on paper, assets minus liabilities.
So pulling all these financial pieces together, sales, profit context, cash flow, balance sheet, what were the main reasons for their overall performance in 2024?
I'd say it boils down to a few key things. First, that strong volume growth was crucial, especially in the U.S., and for key products in both medicines and devices.
Right.
Second, the positive impact from acquisitions, particularly Shockwave, adding to the medtech growth. Third, they managed to achieve this growth despite some real headwinds, those negative currency impacts, and the drop-off in COVID vaccine sales.
So managing challenges well?
Seems so. And fourth, their ongoing efforts to manage costs effectively and prioritize that huge R&D spend strategically. They also mentioned benefits from a restructuring program they finished in 2023. It all contributes.
Okay, that makes sense. Now let's talk about something crucial for investors. Shareholder value. How does Johnson & Johnson aim to deliver that? What are they doing?
Well, one very direct way is through dividends. They have a long history of paying dividends, and in 2024, they paid out a total of $11.823 billion in cash.
That sounds like a lot.
It is. It worked out to $4.91 per share for the year. For many investors, that consistent dividend is a major reason they hold the stock. It shows a commitment to returning capital.
And what about share buybacks? Do they do that too?
Yes, they do. In 2024, they repurchased $2.407 billion worth of their own common stock.
And the idea behind buybacks is?
Well, by reducing the number of shares outstanding, buybacks can potentially increase the earnings per share and boost the value of the remaining shares for shareholders. It's another lever they pull to return value.
So dividends and buybacks are the direct cash returns. What's their broader philosophy for creating value over the long haul?
Their core strategy really centers on, well, what we've been discussing. Driving innovation through that massive R&D engine, making smart strategic acquisitions to expand into high-growth areas, and being disciplined about how they use their capital.
Makes sense.
They also, in their report, show how their total shareholder return stacks up against benchmarks like the S&P 500 and scientific healthcare indices over 5 and 10 years.
How do they compare?
Generally, their long-term track record, especially over 10 years, looks pretty solid compared to those benchmarks. The 5-year comparison might show some areas where performance hasn't been quite as strong relative to, say, the broader market, highlighting potential areas for improvement from an investor perspective.
Okay, so bringing this all together now, the segment performance, the financials, the shareholder value plans, what's your overall assessment? How does J&J look moving forward?
Look, Johnson & Johnson clearly has a very strong base. You've got this diverse portfolio, deep commitment to R&D, significant financial muscle. They seem confident in their strategy. But they are facing some real headwinds. That Stelara biosimilar competition starting in 2025 it's going to be a significant challenge to their revenue. There's no way around that.
So managing that transition will be key.
Absolutely. Their ability to keep innovating, to bring the next wave of important products forward to offset that loss is going to be critical. Plus, they need to keep navigating all those other challenges, the complex regulations, pricing pressures, global economic uncertainties, the legal issues like talc.
It's a complex balancing act.
It really is. Their success will depend on executing their strategy, continuing to meet patient needs, and managing those risks effectively. Their commitment to their credo, focusing on long-term sustainable growth for everyone involved, patients, employees, communities, and shareholders, that's the foundation they say they're building on.
This has been a really fascinating deep dive. You get a much clearer picture of just how massive and complex Johnson & Johnson is and, how central it is to healthcare worldwide.
Yeah, and what really strikes me is that constant tension, right? You have this drive for incredible life-changing innovation on one hand.
Right.
And on the other, you've got these intense market pressures, the biosimilars, the pricing reforms, the competition pushing back, navigating that while still delivering value long-term in this changing healthcare world. That's the real challenge.
Definitely gives you something to think about regarding the future of these healthcare giants and the industry as a whole. Thanks for joining us for this deep dive.